Very good morning, good afternoon, and good evening to all. Myself Vaibhav. In today's session of automated trading, this is the third part of the BWMFI and the ATR variance, which we started on Monday, and we are not likely to finish it up today. Most likely, we will need a couple of sessions more. And by now, I hope you are well familiar with this market facilitation index functionalities, how we are utilizing it on the charting and of course in the algorithm. This is the ATR for optimizing purpose, and then the min-max to help us guide in determining the trend. Before we get started, before we go on the charts and see how we need to develop it, this is a standard disclaimer. Here I would like to remind you that this session is simply for the tutorial purpose and no claim is being made regarding the profitability or otherwise of the algorithms which we will be developing during the session. Suppose if you want to use any of it, I would recommend that you do extensive trial runs for maybe many months or even maybe years, and also allow it to run on the demo account to get a clear cut idea of the efficacy of the said algorithm. And now, last but not the least, nothing in the webinar is to be constructed as an advice to trade or for any particular setup. With that, we head back to the chart to see what we are trying to achieve with our algorithm. Our instrument has been the Euro USD. This is the instrument of our choice. Of course, if you want to use other underlying instrument, you can do that as well. So the basic premise has been that we want the minimum value and the maximum value of 30 hours to be rising. So we have defined this on the hourly time frame for 30 time period, and for the buy trade, that is the requirement. And then also we need the consolidation phase to have passed. So for that we will be checking and we will be comparing the variance between the last hour's ATR value to the value 12 hours back, and that is also indicated in the title of the station. So we will want the ATR to be at least 20% lower or more than that compared to the prior ATR value. That will mean that the instrument has gone into a consolidation phase, and it is now not more showing that much momentum. And then when the MFI picks up and the volume picks up, it can be on the either side, on the downside or on the upside. So either way, when the momentum picks up after due consolidation, we want the new trading to happen, and for that we will be checking on the historical candles, last hour's candle closing pattern. If it is rising, if the maxima and the minima is also rising, and if the ATR condition is fulfilled, and then the MFI goes up, volume goes up, we will go for a buy trade. And suppose if the maxima and the minima values are falling, the ATR condition is fulfilled, and then the historical candle also shows the downside, and then again the MFI goes up and the volume goes up, we go for a sell trade. So that is the whole idea behind this algorithm. And now the question arises, what should be our entry point and what should be our stop loss and the target zone. So for that we are basically trying to buy or sell closer to the last 5 hours. Suppose we are going for a buy trade, then we want the buying to happen as close to last 5 hours low as possible. And when we are looking for a sell trade, we want the short selling to happen closer to the maxima of last 5 hours. So we are bringing in these maxima minima defined for 10 minutes time frame, and this we will do a bit of calculation. We are actually utilizing the hourly ATR, and we will when we are going for a buy trade, we will add say 50% of the hourly ATR to the minimum value, and that would be our entry point. And for sell trade, we will be deducting the 50% of the ATR, and that would be our selling price. And then we will also need to define a trigger point. And since we are going in for the limit order, we will need to keep the difference. Suppose if we are going for a buy trade, then the last tick price should be at least more than 60 to 70% higher than the from the minima, and for that we will be, say we take the difference, like I think 60% should be good enough, so we can take that as well. So what we do, we take 60% of the hourly ATR, we add it to this minimum value, and we make that as our trigger price, and whenever the price starts to rise beyond that, we immediately place the order below at the 50% of the ATR. We can do that as well. And for the short sale, we have to utilize similar frame, similar pattern, but of course in a inverse fashion for on the maxima side. So we will need to deduct some 60% of the ATR, and then the last price should be below that, and then the limit order would be placed above this 50% of the ATR range. So I hope you understood what I'm trying to say. If not, then you can again have one more look when we will do the same thing here. Now coming back to the Visual J Forex platform, here we have done standard instrument subscription, we got the BWMFI indicator block, we got these 4 min-max blocks defined for the ask side on the high price, and the bid price on the low price, and is ask side on the high price to define the maxima and the minima, the historical candle to check the price action in the last 1 hour, and then ATR for the ATR variance purpose. These 10 minutes each, the time period is 30, so that is the data for 300 minutes, and 300 minutes works out equals to 5 hours. So that's it. And then here we have done this calculation, and as you here you can see we have defined the condition 80% of the ATR. We multiplied line 22 by the 0.8 to get the 80% of the ATR, and we will want the last hour's ATR to be less than 80% of the ATR 12 hours back. So we are doing that comparison here. Then we define this 50% of the hourly ATR to get entry point. But I think here we had done this calculation yesterday, but I have named it as BE. But I think here I did a silly mistake. It should be named SC, as we will be deducting the value from the maximum for a sale order, and for the buy order we will need it to add it on the minima. Okay, we have made that change. So now let's see what we have done. We have defined this condition: volume up, MFI up, the candle has closed in green, the maxima is rising, minima is rising, and the line 21 is the ATR, which should be less than the 80% of the 12 hours back ATR. So we have got these conditions right. But here I also noticed that this block shouldn't be here, it should be on the sell side, as we don't really need the maximum value of last 5 hours. On the buy trade we need it on the sell side. So again we kind of inadvertently joined it here, so pardon me for that. Such mistakes happen in coding all the time, and that's why we need to do debugging and bugging all the time. And even if you happen to spot any, you can of course write it in the comment section, and we can work it out together. Now for the day, we will need to define the entry point on the buy side, and then we will need to define the stop loss, target zone, and a trigger point as well. So we have our task cut out. We first thing first, we do some calculations, and as I said, we will need to do one 6% of the ATR calculation. We want it to define the okay. So here it comes. We now take the ATR value of last 1 hour, line 21, and then we get a new variable, create a new variable, double. It will be, what shall we name it? Okay, ATR difference 2. And the value will be 0.6. That should be good enough. 82, and then result needs to be a1 into a2. This will be by condition, so we write it as bc. Okay, now last tick value should always be greater than this should be greater by this much distance from the minimum value of last 5 hours. So we will need to do addition as well. So we need to take one more calculation expression. We take the minimum value, and where is the minimum of last 5 hours? We want it on the bid side of the low price. This is ask, this is ask, this is bid of the low price. All right, and we will need the minima. We need to first, so here we got this minima on the now we need to do one more thing, and that is to do the addition, and we need to do a1 plus a2, and it will be the first by condition, that is bc1. Okay, now comes the question of defining the exact trigger point, and for that we are going to need 10 seconds candle. I think 1 minute should be fine. We take two historical blocks here, and for that we need to look at the component part of the info. All right, we got two historical candle. We will be looking at the minutes closing, and we will be comparing to the last 1 hour candle, and as and when the price starts to rise above the last hour's closing level, we want the order to be placed at 50% of the ATR from the minima of last 5 hours. So for that we need to make changes here, and we make it 1 minute each. Yes, so we have done this 1 minute each. One should be shift 1, other should be shift 2, And now we need to do the comparison, and let me see what we have done here and what needs to be done. We need to make sure we will now need to take the elastic price, and that elastic price should be above. So we take these elastic tick beads, and it should be above this condition, the buy condition, first one. Okay, so we now need to take additional if blocks. What happened? Okay, so it's working back, no error this time. We now need to look at this. Elastic tick bit should be greater than the first buy condition. Alright, now let us join these on the lower side. We don't want to forget the condition which we had defined yesterday. And the requirement was that the last hour's ATR, hourly ATR, should be less than the 80% of the ATR. So we join the dot here. So flow has been defined. We also want during the consolidation the new low should have been created on the 5 hours. That means there has been some correction and consolidation, and it will give us more comfort in terms of the risk as well. So what we do, we compare the current minimum value as and when the order will be placed, and we compare it to the minimum value 5 hours back, and we want it to be less than the minimum value 5 hours back. So we take that condition as well, and we need minima here we are going to need to, so now and here we take the current minimum value, and we take the minimum value 30 candles of 10 minutes each, that is 5 hours back. Yes, bid side, low price, and the current minima should be less than the minima 5 hours back. So that condition has also been defined here. Now we need to join the flow here, and it will pass only if it is less than the prior value. All right, so far so good. Now the next question arises is what should be the trigger point. and the trigger point, as I said, is going to be defined utilizing the 1 minute's values, which we will compare it to the last hour's candle closing. So here we have got this candle 49 and candle 50, and then we have here candle 35 on the hourly time frame. So we need to make sure that the order to be placed when the price is rising, though it is going to be placed on the lower side, so it will be a limit order. And for that we need to take the candle 49's closing level. It should have closed less than the candle 35's closing, and here we go. Okay, we got candle 35. First we take candle 49, it's close. We compare it to the candle 35's close, and it should be less. Alright, so it should be less, means we now have to check whether the candle 50 has closed above the candle 35. So again we take candle 35 closing level and we compare it to candle 50's closing level. So and this should be greater than the last 1 hour candle close. So let us take all these blocks where they belong. So most of the conditions we have defined, barring one or two, I guess. Now is the time to move towards the calculation for the stop loss and the trigger point. We also need to do the calculation for the entry point on the buy side, candle 49. Okay, candle 50 is close will need to be higher than the candle 35 is close. And let me see if we have defined the buy entry point. No, we haven't really defined the buy entry point. For that we now need to do one more calculation expression thing, and here comes the calculation expression. We need to take the ATR value, hourly ATR value, and we need to then multiply it by 50%. So we have that here on this side, and before that we take the minimum value of the bid side on the low price current. Yes, this is the one, minima 25. Now we need to add 50% of the hourly ATR to it, and that would be our buy price, and that is 81. The ATR difference first. we now do A1 plus A2, and the result of the calculation will be by entry point. So here we have defined the by entry point. Now is the time to bring in the pending open. For pending open, we will need to do further calculations as well. So now we have only 2-3 minutes left, so I'm not sure whether we will be able to complete it today. So let's see, otherwise we will need to work on it tomorrow. Open at market, pending open. Okay, this is the price this is the block we need, and we are actually placing order below the current market price, so it will be by limit, and the input price is going to be this BE. Default instrument is all good. Trade amount, now the trade amount we usually go for 0.1 million. Slippage 2 pips should be good enough. And then the next question arises of the stop loss and the take profit, but for that we will need to do some calculation. Now we also need to see what is the optimum stop loss and the trigger point. Suppose if let us make it back again to 1 hour each, and if the trend is downward, then we want the selling to happen after due consolidation and correction, and it would be a start of new momentum on the lower side as well. So at such instance, I think the target can be kept wider, and suppose if we assume rest of the conditions are fulfilled here, maybe I think somewhere here. Okay, let us assume we are not really sure, we haven't really checked. This one is looking better one option as an example, as we have this green bar as well. So let us assume this is our entry point. This is the trigger point, not entry point. Entry point is going to be closer to this 5 hours maximum value. So suppose this is our entry point, trigger point, and then we will need to define the order validity time as well. So I think 2 hours should be good enough, and we have already done the ATR thing. We are taking the sell order at 50% of the ATR from the 5 hours maxima. So the ATR here is of around 12 pips. So roughly 6 pips will be the 50% value, and we will deduct it from this maxima. Suppose if the maxima is of, what is the price? The price is 1.081, then we will deduct 6 pips, and it will work out 1.0811, and that would be the price at which the order would be placed. And now the question is what should be the target price and the stop loss. Now if the ATR is of 11-12 pips, then maybe we can even do that. 12 pips will be our stop loss, and conservatively speaking, I personally prefer to go with at least a stop loss of 1:2. Even more than that can be kept. So suppose here, if you want the trading to happen, the 12 pips would be the stop loss, and then 24 pips or even more than that can be kept as a target. We will keep it dynamic only. We will utilize the calculation expression, and we will try to keep it dynamic. But as the time is running out, we will do these all the things in tomorrow's session only. So for the day here, we now need to sign off, and we will be back again in tomorrow's session. Thank you all for joining in. Have an excellent day ahead. See you tomorrow. Goodbye.